Hi everyone, hope you're all doing well, and today I'm in a little bit of a different setup. I thought that this video would be best for me to sit down and do it because there'll be a lot of me showing slides, and I thought, well, it might just get a bit boring, so if I put my face in the corner of the screen it might make it a little bit more interesting. So yeah, going for a bit of a sitting down video, but yeah, I thought obviously a bit longer on slides it might make it a bit better. But today we're going to go through all the stocks that I sold in 2020 and why I sold them, and I'll be revealing even though I've kind of done it once, but in a a collective video about like every stock that I sold and the profits I took. Very interesting year in all 2020. We went in at the start of 2020 thinking, well, we were kind of in the situation where we were at currently right now, with the stock market in January 2020 at very all-time highs, with stocks that were at very high valuations, especially on like P history and everything like that. And we're kind of in that situation again now at the end of 2020, but the one big thing that was obviously the big game changer is that we obviously had the CV situation, and that made a massive buying opportunity in the stock market. And normally when I went into January 2020, I had 30% cash, and I pretty much went down to like 5%, maybe even less than that in peak CV in March and April. I was buying absolutely huge, and because of that it meant that I needed to get a cash pile back up towards the end of 2020. So obviously there was a few stocks sold, but there was very easy money made. This was the year in the stock market for easy money, really. There was a lot of golden opportunities to go buy some great companies at great valuations, and obviously there's still a few companies that won't be on this list because I'm still holding them, and I will be holding them for a very long time. But there was a few companies that I saw in, especially the COVID, where I was like, that's crazy, like how much that's dropped. I don't like the company like huge, but I thought like it's still worth more than that. So there's a lot of companies that I ended up buying just because I was like, that's still cheap for that company, even if I don't like it amazing. I was thinking that was a great opportunity. So we're going to go through all the companies that I did buy, and the companies that I sold actually through this video. And yeah, I'll try to break it down like why I sold every position. So we'll go through the year month by month, and yeah, I'll try to give some information on them. So we started off in January, and one of the stocks that I bought in 2019 was CRB Group, which a real estate agent for like offices and warehouses for businesses. And yeah, I bought that one in 2019. I thought that it had a little bit of upside from here, and I was up 50% in January, and I thought I'll take my profit here in this one. Turned out to be a pretty decent move because obviously when COVID came, it absolutely killed the stock. But yeah, that was a nice little gain that I made in January, and I just wanted to build that cash pile up, like I say, because going into January 2020, I felt like the stock market was in a bit of an overvalued situation, and yeah, that freed up a bit of cash and was some pretty nice gains. Next up in February, I sold my shares in Tesla, and I sold my shares in Tesla for 250%, and that freed up once again a lot of cash for me, and that move really helped me because I was able to go buy so much in a month's time when the COVID dip happened. And I was looking at Tesla and I thought, well, 250% is definitely a fantastic move in the share price, and I thought I'd sell out. The one little regret I do have from this is that I did not go buy again in COVID. Like obviously back in February I thought that's a pretty rich valuation for Tesla, and then it obviously dipped again after that. It back down into the like $300 range, and I should have really bought then, and I didn't. That was probably one of the mistakes that I did make in 2020. But one of my key things was to make sure that I was a little bit more active on the selling side. Previously in previous years I haven't really sold that many stocks, and I feel like that I wanted to be a bit more active in selling and using that cash to go buy some companies. And even though I could have bought Tesla again, I'm glad that I did sell in February because that was its highs before its COVID dip, and me selling at that point gave me so much cash to buy stuff in the COVID dip. With that money from Tesla, I was buying shares in like Pinterest, which then went on to make good returns, like Facebook, Boeing. So yeah, I'm kind of happy with that decision still. I just wish that I bought Tesla in the COVID dip. That's the only thing that I do regret with that position. But you can't, at the end of the day, 250% gain is, fantastic, isn't it? And then we got into March and April with the COVID dip. And yeah, obviously March, there was no stocks that I sold in March. April was the next month that I did sell some companies, which was the first one I sold was Wynn Resorts. So this was a company that I pretty much bought in April, and then I sold again I bought in March, and then I sold in April a month later. And I bought Wynn Resorts down at $40, and I made 80% on that in like 4 weeks. Which was crazy. And I was like, yeah, I'm just going to sell out this one now. And I sold out about $80. It has gone up a little bit since then, but still probably a good decision because, like I say, I freed up. When I think about how much cash I burnt through buying in that time, it just freed up some more cash, and then I could go buy some more. So I think that was a very good decision on that one. And I think, but so far, these 3 stocks I sold were pretty decent decisions. Next up was iRobot. So I bought iRobot in 2019. Felt like the company had been a bit undervalued because of the whole situation with the factories and taxes and the China war that was going on. I was up 50% in May, and I was like, this company is about, I think I sold that about $80, and it's about that right now, to be fair. So that one seems like another good decision as well. I just felt like that was kind of fair valuation for it. Felt like there was better opportunities out there. Whenever I'm going to sell a company, it's either because I need cash or I see a better opportunity out there. And I did need a bit of cash because, like I said, I burnt through it. But as well as that, I think there was some better opportunities out there to go buy some stocks that were still sold off from that COVID. So yeah, I think that was a very good decision once again. And once again, it hasn't moved too much from where where I sold at a few months ago. So it seems pretty good. And then we got into June. June was a little bit busier. Now this is probably one of the companies that I probably sold a little bit earlier, but I sold out of a line, and I made a 30% gain on that. Now, if I did hold that company, I would have made probably about 100%. But yeah, I sold out of 30%. I just was slightly worried because I thought, well, a line, it's involved with like clear aligners for your teeth. And I was like, are people going to go and get these done? With all the COVID situation, the cleaning on chairs, the products, it's one of the worst industries to be in. And I was like, right, this is one I'll just step out of with a 30% gain. And it seems like they actually smashed analyst estimates. This is the thing where I kind of probably made a little bit of a mistake, is that analysts put their forecast for this company way down, and because of that they beat it. And that's something I should have took into consideration, is how low analysts were going to put the estimates for this in. And yeah, they absolutely smashed it. So still happy I made a decent profit, but yeah, I probably could have held that one, but I think you can understand my reasoning why I did take that profit on this one. And then we have Boohoo. So yeah, I bought Boohoo. It shot up absolutely crazy. I made 80%, and that's when I sold totally out of it before I bought again a little bit later on to do with like the Leicester factory situation. And also there was also the other situation that happened with Boohoo. So yeah, I mean, yeah, this was the first time I held Boohoo, and I made 80%. I was really happy with that one. I bought Barclays in the dip as well on the UK front. I sold that out for 50%. I think that's pretty much stayed flat from where I sold out as well. Boohoo obviously is lower than where I sold out. So that was a really good move with Boohoo. Barclays I sold out, and that's pretty much stayed flat. I just thought banks aren't going to go up too much more than this, and yeah, that seems a pretty good move there. So I took a 50% in that one. Then we got to July, and yeah, I bought back in CRB Group. So the first stock I sold in January, I bought back in the COVID dip, and I made 50% once again and sold out from it. And once again, it's kind of gone up a little bit here, but not that much really. So it seems like another decent move, to be fair. And yeah, I mean, made 50% from CRB Group twice in a year is crazy. But yeah, I do like buying into that one. It's kind of like a little bit of easy money when it does get quite low. August was a busy month on the selling side of it. So I sold out of Uber. I sold out for a 30% gain. I pretty much thought that the ride business will take a while to come back. The stock has gone up a little bit from here. So I probably could have held that a bit longer. But once again, I think you can see my same reason between like Uber and Align Technology. Uber, I was just very worried about, how much of it's going to be affected by the CV and the rideshare business, so and how much that will burn through the balance sheet. So yeah, Johnson & Johnson took a 30% profit. Always a dividend stock, a stock that I've held for a while. I just enjoy the dividend, and then I just got to the point where I was like, rather than getting a dividend and the 10% share gains like every kind of year, I was like, let's go make more money from that. So yeah, I kind of just sold that out because I was like, there's better opportunities out there. But I've still really, the time I have held Johnson & Johnson, I have enjoyed the share price gain, and also a little bit of a decent yield off that dividend as well. And obviously that seems a good move because that hasn't gone up too much since. Then I sold out on Microsoft. So this was one where I didn't sell all my position. I only sold like, I think it was about a third of my position. Took 100% profit on it. Sold pretty much near 52 highs. It's come down a little bit since then as well. And yeah, that was a really nice profit. A company that I've held for a while, and I was like, I just feel like Microsoft's near, probably definitely past fair valued. And yeah, I thought I'd just take some of that profit off the table and go use it somewhere else. And then I have JD.com. So I sold, I think it was a third of my position in JD.com, and I took a 300% profit in this one. Didn't say very much like Microsoft. I was like, I still really like the company. It's just, a bit more to the overvalued side right now. So I thought I'll take some profit off that one, and yeah, that's pretty much not done anything since I sold out that one. So I'm happy there. And then Walgreens. So funny enough, Walgreens was the first company since I've been in the stock market where I've sold for a loss. And yeah, it was kind of crazy. Like I always enjoyed saying like I've never sold a company at a loss, but unfortunately it did end this year, which was Walgreens. I took a 30% hit on that one, but when you count in the dividends, it would have been a little bit lower than 30%. But yeah, I just kind of looked at it and I was like, this company, the management are doing a terrible job. With a pandemic, it should be doing all right with what it supplies. And I was like, as well as that, it's closing down so many stores, so that's just going to decrease profit and revenue. And yeah, I was like, this is just causing so much pressure on the company. I'm going to get out of this one. So yeah, that was kind of a bit of a fundamental change with that one. And yeah, took a bit of a loss, but hey, I'm sure we can make it back on another company. And then in September, Easyjet had a bit of a drop in their share price, and it was due to the board saying that they probably won't be able to run past summer 2021. The stock absolutely dived, and I bought some shares, and I pretty much made 25% within a month. And yeah, that was quite easy money. Easyjet's gone up a little bit more because there was the vaccine news after that, but I obviously have shares in Jet2, and I always wanted that to be my main priority, my main airline. I just saw Easyjet as like, this is like a drop that's way too much. I'll just buy into this. And yeah, that was like just a quick turnaround play, and it did really well. October, I sold I think it was 10% of my Pinterest position for the first time, and that's the only part that I've sold in Pinterest. I sold, like I say, 10% of my position. I made 200% on this one, which was absolutely insane. Obviously helped with COVID, and yeah, that was just a little bit of profit taken in that one. Still got a healthy amount of position that will run the long term in that one. And then we've got Carnival. I bought Carnival in a little bit of a dip, just to kind of cover my main position that's down, because I bought that in like 2018, so that's obviously been affected by the corona. But yeah, I bought Carnival in like the low teens just to try and cover some of the losses on the other one, which I still haven't sold, but that will help cover some of the losses. So I took a nice 30% gain on that one. And then there was Aviva, took a 30% gain on that one. Same again, didn't think there was loads more upside left in that one. And I prefer like Legal and General, for example. So yeah, that was a nice little gain there. And then my second loss ever in the stock market, which was Cineworld. And yeah, I was kind of a little bit gutted on this one. I think I ended up taking, I think it was a 50% loss on this one. I always said it was a very high risk play in this one. And the annoying thing I always said with Cineworld is that if I knew I was going to lose this much money, I wouldn't have sold it. The problem is I put my sell order in Trading 212, and this is when Trading 212 started having a few problems this year. I put my sell order in for Cineworld, and yeah, literally it took half an hour to sell it. And I was driving to work at the time, and I literally went on my phone and it just sold when I got to work. And I was like, if I knew that it was going to take half an hour for my order to get through, I would not have sold out at was it 18p or something? And I was like, that was when I was like, I kind of like lost my temper with Trading 212 a little bit. I was like, it's got to be better than that, because if I knew it was going to go down to that, I would have risked it and held it. And like I say, it has come back since then, and that was kind of gutting. But I did want to look at getting out of Cineworld after the news came out that there's going to be a lot more films coming to streaming sites a lot quicker, and also because of the delay to April, I was like, that's going to proper kill Cineworld. And but like I say, if I knew what Trading 212 would do me over like that, I wouldn't have sold it. So yeah, that was kind of like I said, that wasn't solely my fault really, because I was happy to just take like a 20% loss on that one, but like to take that much, which wasn't really my fault. It's not been a great year for trading 212. We'll leave it there. And then we get on to November. So I sold out of Lordstown Motors and I took a 20% profit on that one. I pretty much sold out of that one really because I was seeing a few red flags. First of all, the valuation was a lot more than what I realised. And then when I looked at the valuation, I was like, this is quite high for this company. And there's still a few hurdles in the way to where they want to get to yet. So I was like, I'm gonna take my profit on that. And also I was getting a bit of some red flags from the CEO because of his previous Workhorse days and paying people for interviews. And then he was starting to do the same thing again and paying people to have interviews and promote his product. So I was like, that's not great. So yeah, I was kind of like, I'm going to step away from this one. And I took a 20% profit. And yeah, since I took it, I think it was $27 or something I sold out of. And yeah, it's dropped down, I think, a little bit since then. So that seems like a pretty good move. Workhorse I bought in for the United States Parcel Service contract. Mainly sold out of this once again because the valuation got too much, and I also once again had a few red flags from management, especially the CFO. He was doing the company was burning through millions of pounds, and they had hardly any of that cash on the balance sheet. And with the CFO just off doing interviews, I was like, man, I don't like that from my leadership team. They should be managing the company, and that was me out the company out there. Next up, I sold the 10% stake in my National Express position, which was a 80% gain, which is, I think, was a nice little move. And then I sold a 10% stake in my Jet2 position, which was like a 90% gain, which was very nice. But obviously, them two companies I want for the long term, just a little bit of profit taking. And then we also had a Boohoo where I took a 30% gain, just trimming my position. That's when I bought in the second dip, and I wanted just to make some easy money, and that's what I did, which was really nice on that one. And in December, a company that I actually haven't talked about, I actually sold half of my Ultra position out. Pretty much sold out flat. I bought this one as a dividend stock. I was making about a 9% dividend yield on that every year, and I just kind of got to the point where I was like, I'm going to get that money free, and I'm going to go put it somewhere else and make it into better, where I can get a better return. Because you look at some of the returns that I have had this year as well. When I go through all this list and all these companies you see the sell things, but you don't realize sometimes like where that money goes. So for example, with the money that all them companies I've gone through and that I've talked about selling, a lot of that money's gone into companies like Boeing, which is up like 70%, Pinterest, which I bought in the COVID dip, which is like 200-300%, going in and buying Turtle Beach, which is up like 40%, buying Tattooed Chef, which is up now a good 40%, but starting my Beyond Meats position. So you just see like this is where like I take some profit, sometimes trimming positions, sometimes selling all the position, and it's just cycling the money. You look at my portfolio this year, and with this sort of strategy that's in place is where I've managed to achieve like 100% return in my portfolio, and I basically doubled my wealth in 2020. Obviously massively helped from the COVID dip, but a fantastic year, some great gains here that made some nice profit that's gone on to make even more money. And like I say, these are some of the companies that I just feel like either there was better money to be made somewhere, and or the fair valuations. And like I say, there's obviously some companies that are still in the portfolio running that are doing quite well as well. So yeah, overall, those are the companies that I did sell, and hopefully you found some information useful on there. And yeah, great year in 2020, and hopefully we'll have a good year in 2021. It'd be nice to have another little dip somewhere around March time. We'll see what happens, but hope you enjoyed it anyway. Smash the like button if you are new, subscribe. Something a little bit different, I hope. And yeah, I'll see you in the next video.